G'day everyone. Well, the big news over the weekend was the Liberal loss in the by-election. Massive swing against the Libs, and you're seeing that play out in the market this morning. I'm talking on Monday morning about 10:30, and already the market's down about 30 odd points, which is a lot more than what futures suggested when the New York market closed on our time Saturday morning. So clearly political instability is weighing on share prices at the moment, and given we've got a general election coming up in 2019, that instability and the effect on the market isn't going to change anytime soon. Related to that, we've got the news out on the weekend of auction clearance rates plummeting in Sydney and also quite weak in Melbourne, which suggests the housing market is falling quite steeply at the moment. Brings me to the first chart I want to show you today, Commonwealth Bank. In the last few weeks, that's broken down to the lowest share price since back in 2013. Obviously, the implications from the Royal Commission are affecting the share price, but the fact that the housing market is really starting to slow now as banks tighten up their lending criteria, credit is starting to tighten in the market as well. That's having a big effect on the bank share prices. So in terms of whether they're buys at the moment, one of my rules is to never buy a stock in a downtrend. And as you can see, Commonwealth Bank is trending lower quite sharply, so I'd be steering clear of that for the time being. The other chart I wanted to show you just on the housing market, this is REA Group, which is realestate.com. Obviously, it benefits from a buoyant housing market in terms of turnover and housing advertising. As you can see, in the last few weeks, that stock price has really plunged quite sharply. It was expensive owing to its near monopoly position in the market, but clearly investors have really reassessed its position and its strength in the market over the past few weeks, and the share price has derated. Once again, that's falling into a downtrend, not a stock I'd be wanting to buy on the dip. There will be bounces from time to time, but I think there has been a fundamental shift in housing markets over the past 6 months, and that share price is catching up to that reality now. The other influence on Australia is the Chinese economy, which is starting to slow. Data out on Friday indicated that the Chinese economy is at its slowest point in years. And here you can see the Chinese, or the Shanghai Stock Exchange, broke down to its lowest level in years. So the bull market that pretty much started in most global equity markets in 2016 was back here, and it's now below those levels quite sharply. Slowing Chinese economy will flow through to a slowing Australian economy and put additional pressure on us there. And perhaps last chart for today is why the gold price is starting to finally turn around after a lot of weakness this year. A couple of weeks ago in this video update, I said to keep an eye on the roughly US dollar 1215 an ounce mark. It broke through there last week and is starting to consolidate above that level. So in the next few weeks, if this political instability, US-Chinese trade war continues, I'd expect to see gold make further gains upward. Thanks for listening, and be sure to click on the link below to subscribe for more market updates.